If you are a student or parent looking to understand education loans, you are in the right place. Today, we are going to break down an important concept that affects your loan planning, the moratorium period. It's a key to managing your education loan repayment. Hi everyone, I am Simran, co-founder at Epicred and your trusted guide through the education loan process. In today's video, we will answer all your questions from what exactly the moratorium period is, how it works, when do you start repaying your loan, and how Epicred can help you save money along the way and much more. So let's start with the basics. What exactly is a moratorium period? When you take an education loan, you are required to pay back the money with interest in the form of monthly EMI. However, most banks offer a moratorium period, which is a break from the EMI payments, during which you don't have to worry about repaying anything, or you only pay the interest and not the principal amount. Many students and parents get confused between the moratorium period and the grace period, but they are different. The moratorium period is when you don't have to pay the EMIs, usually during your course and for 6 to 12 months after, giving you the time to find a job. On the other hand, the grace period is a short window after your EMI payments begin, during which you can make a late payment without facing penalties or charges. In simple terms, the moratorium period is a longer break from the payments, while the grace period is just a short extension after your payments have already started. Lastly, there is another term called the repayment holiday, which is often used interchangeably with the moratorium period. It can refer to any long period where you are not required to make any payments. Now, not all the moratorium periods are the same. There are two types of moratorium you need to know about. First is the full moratorium period. This is where you don't have to pay anything during your course and for the additional 6 to 12 months after your graduation. In simple words, no principal and no interest during this time. This is typically offered by the government, banks, or the collateral-based loans. Now, coming on to the second one, that is the partial moratorium period. In this scenario, you are required to pay only the simple interest during your study period. So while you don't pay the principal amount yet, the bank will still charge you interest. This is more common with the private lenders or the unsecured loan. Let's go over a quick example. If you took a loan of 20 lakhs with a 10% interest rate and your course lasts for 2 years, in a full moratorium, you wouldn't pay anything during your studies and the extra time after the course. But in the partial moratorium, you would only pay the simple interest, let's say 1.67 lakhs per year for the same duration. Okay, so we know what the moratorium is, but how does it affect your overall loan repayment? Here is where it gets tricky. Even though you are not paying EMIs during the moratorium period, interest continues to accumulate, which means that the total loan amount increases when the moratorium period ends, and your EMIs will be higher because you will have to repay both the principal and the accumulated interest. Let's break this down with an example. Let's say you took a loan of 30 lakhs for your education with an interest rate of 9% for a 10-year term. Without a moratorium, your monthly EMI would be around 38,000. But if you have a full moratorium, you won't pay anything during your studies, so the interest that accumulates will be added to your principal amount. And by the time your moratorium period ends, your loan might increase to 35 lakhs and your monthly EMI could go up to 42,000 per month. So while the moratorium period can give you some time, it can end up costing you more in the long run. In addition to the moratorium period, some lenders offer a repayment holiday. This is a brief pause after the moratorium period ends. Now let's talk about the government versus private lenders. The moratorium period and its feature vary depending on the type of lenders you approach for your education loan. Government banks generally offer a full moratorium period. This means no EMI payments during the course period and the grace period. They also tend to offer lower interest rates, making them more affordable in the long run. However, they can be more rigid when it comes to the loan disbursement and the approval processes. On the other hand, the private banks and the NBFCs often offer the partial moratorium period, meaning you will need to pay the simple interest during your course duration, but they can offer flexibility when it comes to the loan approval, and many times they have a faster approval process. They can also provide you with the shorter loan tenures. At Epicred, we work with 15 plus lenders, including both the government and the private lenders, to ensure that you get the best deal on your loan. Our team of experts negotiates on your behalf for competitive interest rates, customized moratorium terms, and favorable repayment plans. Now, one common question that arises is, who is eligible for the moratorium period? If you are applying for an education loan for an undergraduate course, some banks and financial institutions may not offer you a moratorium at all, especially for unsecured loans. This means you may need to start repaying your education loan as soon as you graduate. But hold on, it's important to think about the moratorium period, which can give you some relief, but there are also risks you should be aware of. One of the biggest risks is that the interest keeps adding up during this time. Whether you choose pre-EMI or a full moratorium, if you go for pre-EMI, you are only paying the interest, not the principal. This means when the moratorium ends, you'll have to pay more because the loan balance increases due to the added interest. Another risk is that while you are not making repayments during the moratorium, if you fail to start your payments on time once it ends, it could harm your credit score. This can make it harder to get credit in the future and lead to a higher interest rates. However, the benefit of the moratorium is that it gives you time to focus on your studies or the job search without worrying about the loan repayments right away. Plus, under Section 80 of Income Tax Act, you can get a tax reduction on the interest paid on your education for up to 8 years or until it's fully repaid. This also includes the interest paid during the moratorium period if you are on a partial moratorium, helping you to reduce your taxable income and making your loan easier to manage. If you choose to pay full EMI payments during the moratorium, it may seem tough at first, but it helps you reduce the total interest you'll pay over time, and it means your EMIs after the moratorium will be lower. So to manage your loan repayment smoothly, here are the few strategies. First, start early. If you can, begin making partial interest payments during the moratorium to reduce the interest burden later. Second, choose a flexible tenure that suits your budget. Longer tenure means smaller EMIs, but keep in mind that they'll cost you more in interest over time. And lastly, consider refinancing options. If your financial situation improves or you find a better lender, refinancing can help you secure lower interest and better terms. So that wraps up today's video. We have covered everything you need to know about the moratorium period in education loans, how they work, the different types, and how they impact your repayment and the credit score. At EpicRed, we are here to make sure that you get the best education loan terms for your future. Whether you need help understanding the moratorium options, comparing lenders, or negotiating the better deals, we have got you covered every step of the way. We partner with the top public and private banks and NBFCs, ensuring that you get the most competitive rates without any extra cost to you. Thank you so much for watching the video. Don't forget to like, share and subscribe for more content like this. See you in the next video.